Welcome back to the channel, everyone. Today we're going to be talking about why hedge funds in general are currently in big trouble, and specifically going through this article about White Square Capital. So stay tuned and let's make some money. But before we get into the video, if you guys are new to the channel or you've seen some of my videos before but you haven't yet subscribed, be sure to subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Now I want to dive straight in with the key information. So, this article, released today, talks about a London-based hedge fund that suffered significant losses betting against Gamestop in January and how it's currently shutting its doors. White Square Capital is run by a former Paulson & Co trader, Florian. Now the name Paulson might ring a bell. John Paulson, the owner of Paulson & Co, is a hedge fund manager that made significant profits in 2007 betting against the housing market. So John Paulson specifically likes to go against the grain and against the system, but it appears one of his old employees doesn't quite follow the same path. The article goes on to say that White Square, which at its peak managed around $440 million in assets, had a bet against GameStop and suffered double-digit % losses in January. But the article also talks about other large funds that suffered big losses betting against GameStop and AMC, such as Melvin Capital and Light Street Capital. Melvin Capital lost around 53% of its fund value in Q1, sustaining a $4.5 billion loss. Light Street Capital lost around 20% of its fund's value, just here. 20% of the fund value being $3.3 billion, is around $660 million, which is a hell of a lot of money. Although the article, however, does say that a person close to the fund said the decision to shut the fund was unrelated to the meme stock rally. It's just very coincidental that they lost double-digit percentages and then decided to shut right after. Whether that's true or not, I guess we won't know. But I personally think this is only the start of what's to come. I think hedge funds in general are in big trouble. There's going to be more and more margin calls and liquidations. The apes aren't going to sell, and therefore the hedge funds are just going to have to cover their short positions at some point for a massive, massive loss. As the apes aren't selling and the AMC movement is continuing, the gamma squeeze will continue to happen, and therefore the short squeeze will also continue to occur. We can see from Autex that the estimated short interest for Monday was 71.5 million shares. At a current stock price of around $58 per share, that's around $4 billion that's out there betting against AMC right now. If all $4 billion of those shares was to cover all at the same time, with Autex's supposed days to cover of 0.6 days, that'd be $4 billion that floods into the market all at once, taking out pretty much every single buy order the entire way up the chain, causing the AMC stock price to absolutely explode all the way to the moon. However, hedge funds are unlikely to cover all at once at the exact same moment. They're obviously going to cover at different points in time. But at the same time, it's not exactly going to be a nice, neat, single file line of every single fund covering and taking their turn. It's going to be pretty much a panic, and whichever fund can cover their shorts first will cover at that price, and then the price will shoot up, causing the remainder of the funds to cover in a massive, massive panic. We can see that so far as of Tuesday, the borrowed shares have increased by 4.97 million shares, and the net change is 1.29 million more shares that are currently being shorted. Obviously, because of T+2, this is likely to be Friday's changes. However, it doesn't take away from the fact that the short interest is still increasing and has been increasing since around the 8th of June. Guys, be sure to drop a like down below on the video and let me know in the comments whether you think hedge funds are in trouble. Do you think the short squeeze is going to occur soon? Do you think those funds are going to be covering any day now? Do you think they can last another few weeks? Or do you think they're running out of time? I wanted to give a quick overview of today's current price action for the AMC stock. So far today, we've been following this upward trend really nicely, using it as support here, here, and basically here, touching it each time and then pushing the price higher. At one point during the day, the long-term uptrend was actually broken just here, but we've since reclaimed that long-term uptrend and again are following it nicely. Hopefully soon we break past the $60 mark, the $70 mark, and the $77 mark, and the short squeeze can really get started for the AMC stock. I think that when we break past this $65 level, that's when the short squeeze is really going to be on again. I think this $65 level is acting as quite psychological resistance, and therefore when we break through it, a lot of people are going to jump back into the AMC stock enacting that gamma squeeze. And then a lot of the shorts are going to start panicking because they're going to be even more heavily underwater and are going to cover, therefore pushing the price higher, causing the remaining shorts to squeeze and to cover. Guys, if you haven't yet got a position in AMC, but you really want to get in, be sure to pick up some free shares using my links down in the description below. You can get 2 free shares worth up to $1,850 with Webull at the moment, or a free share with free trade if you're in the UK or Europe, worth up to £200. And guys, as always, if you want to see more videos like this, then be sure to check out some of my other videos. Alternatively, subscribe to the channel and ding that notification bell. But for now, cheers.